this Weekend Masterminds webinar. Got Sean down here with us, and myself, obviously. Sean, you might just want to tell everyone a little bit about your background. What's your background in markets?
Well, I started in 1979 at 16. First 6-7 years I worked for a company called Rudolph Wolf Commodity Brokers. This was when gold was going mad, so that's what got me interested. For people who are similar age to me, I had what's called the winter of discontent in 1979, and there was no jobs, and so everyone stayed on at school, and I sort of made the decision that if I could get a job then, I could get a job anytime. So I sort of decided not to go to university or do A-levels and that sort of stuff. I was pretty sick of it being educated anyway. I worked on the softs desk, so I cut my teeth on cocoa, coffee, sugar. Used to the US grain markets, and we used to trade LME metals. It was mainly an LME broker, so copper and all that sort of stuff. I did 4 years of that, then trading and broking. Then I did the first year of oil when NYMEX first opened, so got involved with that. Then we had what's called the international tin crisis, where governments decided that they weren't going to pay any of their bills for tin, which caused a real seismic shock in LME brokers. And our foreign exchange team walked out, and they gave it to me and said, right, now you're head of FX. So I was making markets in spot and majors, and also trading forwards in very strange currencies like Chilean pesos. And, very difficult to work out what the price of anything was in them days, and the spreads could be crazy. So people trade something like the euro dollar these days and have a 1 tick spread, or even tighter than that. I'd sometimes be trading it and have a 50 or 100 tick spread. So much more difficult in them days. I then changed, went to Fulton Period Bond Brokers. I went and traded T-bonds. So I went to interest rate markets, left commodities and FX. Probably my favorite time. I sort of, for whatever reason, bonds seemed to be my favorite and what I seemed to do best. So I did that for 2 years. Then got offered a job in Australia as head of trading and treasury for a company that owned Speedo Swimwear, was affiliated with Foster's Beer, and Gestetner Copiers, big worldwide company. And so I handled all the global interest rate and foreign exchange exposure, made markets in options, stock options, and traded convertible note arbitrage of all things. So we used to take over companies via convertible notes and then doing aggressive takeovers. I was a 1987 stock market crash casualty with that company. So first time I was going to be a millionaire, and it all disappeared in one day when I was asleep. Came back to England and actually completely changed track, and spent a year out of the markets. Was a private detective, qualified as a plumber of all things. Went and did something completely different. I'd had enough. Then the bug got me again, and after a year I went and joined Reuters news agency and helped design what's called Globex, which was an order routing platform, one of the first ones, and also helped design one of the first Reuters technical analysis products called RTA. Also worked in the design of something called Optionetics. So sort of went the other side of the fence, and then made a decision to change and work for CQG, which is at that time manufactured their own technical analysis hardware and software, and the thing that they were really good at was what was called market profile. And I'd been a big fan of market profile in the mid-80s when it first came out, and I used to draw the profiles by hand and develop my own methods of trading bond markets with profile. And so I thought it was a great opportunity for me to sort of teach profile and really promote technical analysis worldwide, which is effectively what I did for 20 years. I had a lot of roles at CQG, head of marketing, involved in a lot of the design of the product as it still stands today, and teaching technical analysis to the professional market. So webinars, seminars, one-to-one, and traveled all over the world. So I was very lucky in that I had, my brief was, you already know a lot about technical analysis, go and learn everything else about it. And so I had the time. A lot of professional traders simply don't have the time to test things and work things out. And I had the very unique position of being, having the time to do that. So I ran the consultancy business at the same time. I wrote technical commentaries for 6-7 years every day. Built systems for people, all sorts of things really, and traded my own money and some other private money as well. And sort of came to the conclusion about 2005 that actually I sort of thought, actually, I can write some studies. I can do a lot better than this. I've written a lot of code. And I thought that time was something that was really neglected in the market. There was very little out there that ever talked about time. You had GAN. I had read some of the books, could not make head nor tail of it. It all seemed mumbo jumbo. I think it still is really. So I built all my own studies, crystallized that in the first book, Trading Time, Methods and Technical Analysis, because I had, because I worked for CQG, I had the ability to have those studies all programmed into a professional platform and be able to market it and teach it. And that's really what set me on the road where I ended up meeting you, 7 or 8 years later, as you became one of my customers. So
along the way, Sean, I seem to remember you've also traded with large amounts of other people's money.
Yeah, various times. So I had some pretty chunky accounts, 10, 20 million, some of them. Different briefs. Some of it was very slow. Pension money, let's return 5 to 10% a year. Don't lose more than one. That sort of stuff. And then other stuff where it was very, very aggressive and trading much more actively and looking to return 100% a year. So different styles, different methods. Due to my age and eyesight and things like that, I'm much more interested in trading strategically these days. I think the thing that got me on the trading safely road and stocks was I fortunately got a 2.5-year consultancy project to trade private money, but also test fundamental data. I've never really been that active in individual stocks before, apart from my stint in Australia. And so I got that ability to use software that could test all of these things. And I thought fundamental information was all nonsense on stocks. And 2 years into the project, I was, yes, that's true. But I did find one thing, which is what I call pass the parcel, or what's fashionable and unfashionable, and that's to do with sector rotation. And to me, that's the secret of the stock market. Is what happens is banks or hedge funds, they put out commentaries, Bloomberg, CNBC, and all these things, and they suddenly decide that healthcare is fashionable, and so they all follow each other. Healthcare goes to the top of the tree, stays there for a while. It's the #1 sector, and then eventually it becomes unfashionable. So at the moment, healthcare is right near the bottom. There's 197 sectors, and healthcare is lurking around 185. Well, 18 months ago, it was #1. Biotech was #1. Currently, the top 8 sectors are all regional banks. Yeah, it's all the same crowded trade. I think we're going to talk a little bit about that today. And what was unloved a year ago was coal and energy, coal and nat gas, and also steel. So steel was rock bottom. I remember putting out a signal on US steel when it was trading about $8. I think it's trading at 38 now, about a year and a bit later. And steel actually managed to get to #1 a couple of months ago. So this endless rotation, that's really what drives the stock market. And I'm not too interested in the sectors in between unless they suddenly jump. So whatever's at the top, in the top 10, I'm looking for it to start becoming unfashionable, start to fall, and then whatever's at the bottom, I'm looking for it to not be unloved anymore and start rising back up. And
well, we might touch on it. Yeah.
But I think on the subscribers, I go through the software that I use for that. There is one product that I use that costs about $100 a month that just helps me track those sectors. So I actually go through exactly how I do it and what I'm looking for. A good example is ODP. I don't know whether you want to call that one up. That's a good example. Office retail space, office furniture, sector number 196, pretty much at the bottom. Now you can see the chart there, and that there's the second green square. So you'll see there's a couple of bicycles in November. It was interesting. It made new lows the day before its results. It missed. Its results were terrible, and the stock went up 15% the next day. So got what's called bad news, good action, which is another thing I really like. So it does the opposite of what everyone thinks, and away it went. So the share price went from $3.40 to $5. You can see there's been various exits, 1, 2, and 3 over the time. So it was unloved. So the stock went up 40–50%. What's changed fundamentally? Nothing. It's still losing lots of money. It's still doing pretty poorly, but it's probably been one of the best performers, apart from banks, in this period. And you've got to remember that it broke up ahead of Trump. Everything else was to do with Trump. This went a few days before. So that's a great example of an unfashionable stock becoming fashionable.
Yeah, okay. We'll probably touch on that rotation as we go through it, but welcome everyone anyway. We'll take up about 45 minutes tonight. Just heard about Sean's background. My background's briefly, I worked at Optiva for many, many years. I've been a professional trader for 15. Was lucky enough to make over 100 million bucks trading in markets, and now just in business with Sean, and we're trying to share our expertise with you so you guys can benefit from it. So hopefully you'll get lots out of tonight. We're going to have a look at the format tonight. We'll probably check out the trades we came up through the week and have a look at how they're performing, and then we just want to flick through all the major markets like we said on the email, cover currencies and bonds, and the outlook for the share market, and any other permanent markets that have come up along this week. I know the US dollar yuan came up this week as a big mover on the downside, but that's actually got a yearly buy signal behind it. So I'm pretty interested in following that one to buy it when it turns around, but we'll cover that later on. If you've got any questions, please just leave them till the end. We're happy to stick around and take questions. And if you do want to get on board, we're going to show you how you can do that at the end of the session. So I think, at this point, I just got some feedback that people couldn't see our screen earlier on. So it's just important that I just quickly bring up a disclaimer. It's important that you read that. Just while you do that, I'll just put that up there for a little bit. But Sean, what was your key takeaway from last week?
Well, a couple of things. First week of the year, and just to talk a little bit about what I call super tankers. These are the really big traders, so big banks, hedge funds, some of those sort of stuff. And having worked in those sort of environments and with people in those environments, they don't really put positions on the first week of the year, partly because payroll is going to come, so big stat of the month. And they have strategy meetings, what's your plans for the year? So if you're working on a big bond desk or equities, what do you like, what you don't like? Lots of meetings, lots of analysis. And so they wait. And so the thing really is that the big traders, super tankers, are what I think move markets. They take a long time to put a position on, and they take a long time to turn around and go the other way. So for me, it's how the strategic players start getting involved, and they're going to start getting involved from this week. For me, it was pretty choppy. The dollar was down, then it was back up after payroll. Gold was up and down as well. Equities, I think we touched 20,000 on the Dow, didn't we? We're very, very close. Yeah, so that went a little bit higher. For me, it was bond markets. So payroll created sell signals in the US bond market. So that was from the 5-year note, 10-year note, T-bonds and ultras. It's a time continuation signal. The major trend is down and it's a sell. So I will definitely be getting involved there, probably via a combination of futures, ETFs and some March options, and looking to build that position. What I like about it, it's really easy to know where I'm wrong. So the high on Friday was, they all failed at resistance, the final short-term resistances. And so I'm, if we make new closing highs above Friday's high, I'm wrong, I'll take my medicine and get out. But this is what I call divergence as a continuation pattern. So that's what time continuation is all about. And for me, that's a signal that I very, very rarely ignore, and I'm certainly not going to do that this week.
Okay, so we're just looking at oil now. We might just flick through the global markets, just give everyone a quick update on what we're thinking, and then we'll revert back to the signals that we picked up on our using our software last week, and just so everyone can see what's going on. But oil's held the monthly support at 51.67, and it's done a whole lot of work around last year's close, which is 53.89. We still have a bullish outlook for that. All the angles are up on the trend lines that you can see there, the white channel lines. Needs to take out last year's high at 56.15 to open up a little bit higher. So for me, oil's still bullish. Sean?
Yeah, agree. I'm positioned in oil. I think we both are, aren't we? In slightly different ways, but we're both in. If it does take out that level, then there's a lot of room on the upside. I did the yearly macro report on New Year's Eve. I think I wrote there's a long-term target in the mid-90s, so a long, long way away. I'm not too worried about dollar strength. If people, the one that if there was a futures market or something and did it, I'd buy oil in euro terms if I really had the ability to do it. But
oil and oil stocks still bullish?
Yes. So I've been going through oil stocks individually, seeing which one's best. Hasn't been much in the way of signals. I think XOP, which is an ETF, held some support this week. Just waiting for oil itself to, if it's going to break when it does it, then to look at what stocks are the best ways of getting involved. So one more level to go, and then after that, we can go a lot higher.
Yeah, the XOP, which is a US ETF that monitors oil and gas, takes out the December high at 45, and yeah, looks really bullish. Some of the annual levels have flipped from being above price to below price, trading above last year's close. So there's a bullish sign there. Okay, just moving along then. Natural gas corrected back after closing the year in a very bullish position. It's very typical to see this start of the new year, the market setting a bullish tone into the close of the year, then needs to go back and back test support, and it's had a magnificent fall last week, but all it's really doing is testing support, and it's at support now. So we're going to be monitoring that on the shorter time frames to see if any opportunities come through there on the buy side. Sean, any comment?
I agree. Nat gas is not one of my favourite markets, can be very volatile, so in the short term, so I try not to look at it during the day, just look at the big picture afterwards. But yeah, coming back to support, from a seasonal point of view, the market probably is not that interested. We're already in January, is there enough nat gas around? So the fundamental players will be sort of thinking that the rally's already happened. Obviously we don't care about that. You could get a really hot summer and then they use loads of natural gas for air conditioning, so who knows. But yeah, coming back to support, and let's see if it can restart its trend.
Sugar has been one that we've been following, and it's right at that critical juncture that we mentioned last week. Had several years down, and it's put on an annual correction, and there's tested that's resistance up here at 21. That's the level that we discussed last week. We closed above the upper channel, so look, can still go either way here, but I do like this one because we're right at the point where it can move both ways very, very quickly. So once again, we'll be looking for a shorter term buy or sell signal from this point because it really is a inflection point. Just looking at it more immediately, we're well above last year's midpoint and we're above last year's close, so it's automatically bullish to me. I think if we can sort of take out this recent high, then there's some larger gaps above. The immediate one would be up to 23.07. John?
Yes, I've got the key level is 2097, so we're pretty close. We have popped above it. If we can start holding above there, then it opens up the upside. Yeah, so 23 first target, and then a major level is last year's high at 2410. So yes, sort of pivotal point. Yeah, be prepared to go either way on the signal, either way from here.
Moving on to gold. As you know, we've been in a short-term bearish position on this one. We've acknowledged for the last 3 weeks that in the bigger picture, gold is going up. Last week, we acknowledged that gold is still in a bearish position in the short term. There's nothing changed from that, despite the fact that gold's pushed up here. Gold can push up to last year's midpoint. Well, look at the study below. This little yellow dot here tells me that gold had 7 weeks down, and that's just an overextension. It's overrun itself on the downside. It doesn't mean it's about to suddenly rally. We're still well below last year's midpoint, which is up around 1220. We could rip back up to 1220, test last year's midpoint, and then collapse again. So I'm still not a bull by any stretch on a long-term basis. Well, sort of on a medium-term basis for gold. Longer term, I'm bullish, but in the medium term, we're down here at 1170 odd. It can pop up $50, no problem, and then start collapsing again. So that's my read on it. Sean, what do you reckon?
Yeah, I've got 1209, and then it's 1220. There's anything from 1209 up to about 1232, I think it is. So it has room to, counter trend move, which is what I think bonds have done since the beginning of December, and then restart again. But yeah, bigger picture is still down.
Yeah, I'd like to see it up at this annual midpoint there. Last year's midpoint, early 1220s. I think I'll be looking for sell signal from there. But in the meantime, looks like we'll just put on a corrective move. So the trend is down, but it's having a short-term move up, and it's just a normal part of trading. So the key thing to remember is to try and stay with the trend. So rather than be buying this sort of stuff, we'll be waiting to sell it in the medium term, and we'll let you know when we get those signals. Euro, interesting for me. It's we broke under that 107 level, which is this red support line that you can see, and the last couple of weeks we've been fighting with that level. Both weeks we've managed to close under it, so automatically that tells me it's got still got a very bearish overtone. Last year's close was 105.5, or around there at the moment. So the story hasn't changed for the euro at the moment. It's still bearish from what I can tell. And I think last week we mentioned once again, the euro is only bullish over 110 from what we're seeing. So no reason to be buying euro. Sean?
Yeah, it did pop higher. It hit that level again, didn't it? It did a real weird spike earlier on in the week. Very, very brief move. Not much liquidity by the look of it. So as long as it doesn't get above there, it's still under pressure. Support is a considerable distance away, what I've got. So super tankers should be involved in FX this week. So it's a pretty important week.
Last week we called the pound a bit higher, and we certainly got a volatile week. Last week we mentioned at the end of the year, if the pound started holding above this channel line, then we'd probably likely see it move higher. it did in fact had an outside reversal. We closed a little bit lower. From there's no reason really to be have a different view from last week. We're still holding that channel. It's entirely feasible that it could have a little squeeze up until we break back under this channel. So for me, I don't actively want to be buying the pound because it's against the trend. But if it popped up to the top of this channel here and presented a sell signal, then that's something I'd be all over. Last year's close was around 123.60. This is on the futures. So if you see it back above there and holding that level, that's probably your first tip. That's gonna move a bit higher. Tom?
The thing that I got was a sell on the euro against the pound. Came up, I think, Monday or Tuesday. So whilst the pound against dollar has gone down this week, it's sort of held its own against most other currencies, and in some of the others it's reversed. So while against the dollar it's down a bit, actually against some of the other cross rates it's actually up. So as long as those signals remain valid, which they still are at the moment, then I think the pound is one of the best performers against the US dollar relatively.
On that note, we might as well go to the dollar index. Interesting, we've got, this is a weekly chart of the dollar index. We've got two weekly sell signals in place. Not entirely unexpected, a little bit hard to see here, but these horizontal lines that are a little bit difficult to see basically show extremes in price. And what it's saying is here, last quarter, we hit an extreme in the dollar index and we're up against this channel. So it's not unexpected for the dollar index to possibly have a little pullback. It could come back to the figure at 100 and still be comfortably in an uptrend. So there's room for that to have a short-term correction still by the look of it. We are under last year's close, which is around 102.60. So nothing's changed in the big picture. It's still going up, but the extent of the pullback is one that you want to watch, and then we'll be looking for short-term buy signals. What do you reckon, Sean?
Yeah, it was choppy last week. Had a daily sell on Tuesday, I think. Market collapsed Wednesday. Came down to some supports, as you can see, and then payroll sort of made it bounce again. So choppy. But as you said, the bigger picture is still up. If we can take out the recent highs, then it's got plenty of room.
Okay, next, maybe yen. Have a look at Japanese yen.
Choppy again.
Yeah, absolutely. Outside, there's an outside move there, so higher highs and higher lows. Closed the week slightly lower. That pretty much sums up the market this week. That outside move where we have a high and a lower low. Certainly, equities and bonds, the whole complex exhibited a fair bit of choppy behaviour this week. So maybe this week we'll start to get some more meaningful moves as the major players come back to the market, on strategic positions Sean mentioned. Just jumping through to equities now. I'll just jump to the Dow. Sean touched on the Dow, just falling short of 20,000 by about a point. I think last week we mentioned there was some weakness starting to present itself. We wouldn't have been surprised. I think our comment was if the market pulled back. In the end, the market held its own and really just made a small range around the recent high and the channel line. We closed above recent support. So it's interesting because on the one hand, it's been going up for 7 weeks and it's been going up for 7 years, and you wouldn't be surprised if you saw a pullback, but so far it ain't happening, and you've got to follow what the market's telling you. So what doesn't go down must go up. So having said that, I'm still tempered by this the concept of people coming back to market from holidays and and a bit more volume coming in. So hopefully we'll get a bit more of a clearer direction. But the picture there is totally unchanged from last week. We could have quite a decent pullback, back to these levels down here, and it would not change a thing. The market would still be in a very bullish position. So, Sean, any additional thoughts on that one?
Yeah, I mean, it's overextended. It's had a good breakout and everything, and makes it difficult to really get aggressively bullish when it's done this. I think one of the things I'm looking at is, I talked about sector rotation, and the top 8 sectors are all financially related. So for me, and we had a couple of sell signals or beginnings of signs of weakness in that. So something else is going to have to take over. The banks are going to rotate back down or go sideways and underperform relative to something else. And the question is whether that's something that's a component of the Dow that can push it on. So I'm watching the Dow stocks very, very closely to see if something else can take up the mantle to push it again.
Sorry.
Yes. Yeah. So if you did, was it HBAN? Was one of the stocks that came up. Didn't do very much on Friday. So there's been a couple of sell signals in the recent past. Had a great run on a breakout on Trump. This is the number 3 sector out of 197, and this is the number 1 stock in that sector. Yeah.
And what is that stock? So, Sean, is it banking?
It's a bank, regional bank. Its name escapes me, but it's a regional bank. It's also trading. The only other piece of fundamental information I look at is the PE ratio in relationships to itself and its peers. And so it's trading at its 5-year high in terms of its PE ratio, so price to earnings. It just gives me some background information about stocks in the same sector relative to each other. So last year, an example would be Tyson Foods, which that was the number 1 sector for a while, and then Hormel as well. Tyson was trading at a PE of 26. Hormel was trading at a PE of 44. So I'm looking at relative to each other, what's the most expensive, and it was Hormel by quite a long way. So I'd be more interested in selling that one. And so HBAN is an example of an expensive stock relative to its peers. If you do NTRS, that was something that came up on Thursday, I think. And very similar sort of recent price action. But what's the thing about this one is this is the number 1 sector, and this is the number 1 stock. So this is top of the pops. Yeah, this is the number 1 stock in the whole market. And what interests me is the fact that that red line, you've got a red vertical line that's jumped to the top. Yeah, so it was from way back, and you've also got the black lines also sitting at the top as well. So this indicates to me that there's been a shift. Yeah, so whenever a line has been at the same value for a very long time and then changes, like it's done here, I'm always very interested in it. So it's the first sign of weakness. It's a pretty tight stop. So that's one that I'm watching pretty closely, HBAN and NTRS.
I'm just looking to these studies below. These will track various time frames. The orange is at an annual level. So far, we're holding under last year's high, and we've got last year's close at 89.05. I would expect if we start closing under the 89.05 level, then you can see some of the gaps that are involved. We can drop back to, you can drop down sort of, what's that, $9 or so pretty quickly before you find any support. So despite the fact that it may be going up longer term, it could have a quick pullback. And the thing that we like about this is that it's at an extreme. That means that when you put a position on, your risk is very limited, but your potential moves to the downside are larger. So we love trades like this, and these are the ones that we'll keep trying to show you. I think some of the other ones, they're all a bit similar, but I know There's PBCT, which is also financial in the US. So it's a common theme, everyone. Some of the banking sectors, appears to be putting in an overextended position, and we're monitoring that one. Some of the other trades that we've done this week was PRU in UK. This went out to subscribers earlier in the week. Similar setup. We had this monthly resistance form overhead, and then we have a sell signal. That's a classic setup for us, so we'll be looking at that. We'll bring this one up next week to show you how that one fared. Other trades that came on this week were EXPN, so I'll just bring that up. My computer's thinking, sorry everyone. Okay. There's another trade that went out to subscribers. Okay, so we had a retest of the recent high, and it held, and a sell signal. We love that setup. You can see that the chart below had held the yearly high, and is now looking to test lower. What else was there, Sean? I know there was
another one in the UK was MNDI, so M for mother, N for no, DI.
MNDI, that's right. And to all the people that are on the trial, thanks for being patient. We should have you with your Chart IQ enablement pretty soon. We'll sort that out in the next little bit. So thanks for being patient. MNDI, that's another financial, is it, Sean? Or
I have no idea.
I love it when you say that. When you get to the point where you don't actually care what the market is.
I don't actually care. When I say that to people, I say I don't actually care what the name at the top says. Sometimes people think, but no, I don't. To be honest with you, I'll just call it up. I couldn't even tell you what it would call it. Monday. What do I do?
That's right, but that looks good from the short side, so that's gone out. I know through the week on our private online group, Sean, you were talking about airlines also being as one of the top groups, but would seem to be at odds with the oil price, looking to break higher. And you were talking about was it LUV? And
yep, LUV. So airline stocks on sector number 10. Just a point about something about sectors and knowing what something is, and other things not caring. The software that I use only actually does this analysis on American stocks, and of course, obviously, there's a huge number of American stocks, and so this rotation is much more important. Whereas in the UK market, really, there's probably only 250 stocks. It's a much smaller world, and so this idea of rotation just doesn't really exist as much as what it does in America. So that's where there's a difference. I still didn't know what the actual name of HBAN was, or NTRS, but I do look at where they actually are. But this, for me, is very interesting, LUV. So airlines are the number 10 sector. So I've already said that the top 8 are banks. So effectively, really, airlines, you could argue, is number 3, well, number 2. Just outside of that area that's very crowded in banks, and it's loved for whatever reason. Don't know why. It's had, as you can see, it's had a pretty good run. But I don't really have any doubt in my mind, having traded for so long, that two things really. The first thing is airlines are not particularly good at hedging their exposures, so they really should be very interested in the oil price and be trying to protect themselves and do various things to limit damage, because it's probably their number one cost is obviously fuel. And so they're not necessarily very good at that. So if oil does break out, their costs will go up significantly, and a lot of them won't be hedged. Also got things like European airlines, which probably have a euro-dollar exposure as well. So they have a double whammy. Already said that price in euros could go up probably a lot more than what it could in dollars if the euro break down as well. So their costs would go up. So the sector is loved. It's at this LUV, as you can see, is at its final resistance, this red line, and it's been there for a very, very long time. So this is an example really where there's been a buy signal, yeah, right into that final resistance. Would never in a million years be interested in that, and because of a combination of factors, I'm sitting there and waiting for sell signals. So I'm scanning, I think there's about 20 airline stocks in America. I'm scanning them every day, and I'm watching it very, very closely. I've got them, about 15 of them on my quote board, so that I'm getting used to their price action, as it were. So very interested in airline stocks, and waiting for some signals to come.
Yeah, I can't stress Sean's point enough, guys. This isn't an algorithm that every signal you see we take. It couldn't be further from the truth. What we do is we buy at support and we sell at resistance. So, for instance, all these little blue arrows that you see that are stuck in the middle of the range, we just have no interest. And as Sean just mentioned, this little blue triangle here that came up recently, a buy signal, well, it's a buy signal into resistance. That's the last thing that we want to do. What we want to do is be taking sell signals at resistance. And for those of you who don't know what resistance is, it's basically where buying runs out, if you like. And so it's a place where you should be selling rather than buying. So rather than try and buy into this line, what we'd like to see is the market clear that line first, and then come back to it and test it, and then give us a buy signal, and then we would be interested. But buying into the final resistance, that's the point where typically energy runs out on a move up. So I just can't stress that enough. We don't take every buy and sell signal that you can see on the screen. It just doesn't work like that. We don't have a black box.
No. Do you want to call up Disney, because one of our subscribers asked us a question about Disney this week? Yeah. So the question was it a
buy signal? What do you think of that buy?
That was the question. So just wait for it to come up. And it's had a great run, and you can see that buy signal on, was it Tuesday? And what we said was it was just below the final resistance, so very similar to LUV, really. And so we said, well, no, it's right at its final level. Also, you can see with the study underneath, you had the annual level there as well, didn't you? So it's got to actually close above that. Yeah, if it manages to hold above that, then you can think about getting involved, or you wait for a pullback back into the support point. Actually,
I can see here that doesn't actually have all the. I might just pull it up on this page here. That was missing a level.
Oh, yeah. So that was a good example of, you've got to wait to see whether it confirms itself. Now that it's got over its final level, then it's got room to go.
Yeah, this is, sorry everyone, we left out a study here. That red line wasn't there, but it is now. This is on a different page where all the studies are in. So we got a question through the week. Oh, what do we do when we get a buy signal and it's into this resistance level? And what we were saying is, well, we don't know, but what we try not to do is buy at the point where usually you find all the sellers are. What we'd rather do is see it go well through it, like Sean just said. And then if we get a pullback now, back to this red line, we'll be looking to hop on it.
Yeah.
So for now, though, it's made a new annual high. Disney's well above last year's close at 104.22, so it's looking bullish. But let's see how this week goes. What else was there? I think there's WBS, but that might be another financial.
That's another financial. It's not quite there yet.
Yeah, okay. So similar story on the financial front there. The banks have had a magnificent run, all up an enormous amount, and potentially presenting a sell opportunity. One thing that came up for me, I was just flicking through some markets tonight, and it's the US dollar one relationship. So I might just bring that one up. I think it's CNH. Yeah. So it's had a stellar run. Back in October last year, it took out the final resistance and has exploded up. And the studies at the bottom are tracking uptrends across time. There's multiple time frames trending up. Very, very bullish. The market's now had a very strong correction. It's still under this weekly resistance here, but definitely one for me that looks like it's worth looking at. It's coming back to test deep support. So and there's nothing to say it can't go a bit lower here. Even though it's had a buy signal, it's also straight into resistance. So that's not something we would take. However, if we do move above this blue line, and then we get a buy signal, then that'll be one I'm pretty interested in. That Chinese, the US dollar Chinese yuan looks extremely bullish, and this pullback that we're watching right now could present a very good opportunity, in my opinion.
Yeah, I mean, it's not something that's easily tradable for the vast majority of people. I think that chart just tells me what a crowded trade it was, wasn't it? It was a bit of a one-way ticket, one devaluation, and then suddenly all takes out 6-8 weeks worth of price action in 2 days. So washes all what I call the week longs out, and then the trend restarts again. Fundamentally, the evaluation of the yuan is actually quite important for macro markets across quite a lot of areas. Has implications for American treasuries. The Chinese have been selling their cash holdings of US treasuries for a considerable amount of time. Also, there's something on the professional commentary, soybeans. So soybeans was on the yearly report was very interesting in that it has a very tight range. It doesn't take a lot for it to become bullish or bearish, because all the time area studies are condensed. What's been happening is the Chinese have been buying soybeans, physical soybeans in very large quantities. And for me, fundamentally, in terms of worldwide stocks, there's plenty of soybeans around. And the reason why they've been buying is because they think their currency is going down, so it becomes more expensive in dollar terms for them to buy the soybeans. Pretty simple stuff, really. And so they've been front loading. So sometimes these connections between markets, the yuan is actually quite important for some of these things. As you can see, that is soybeans weekly, very, very tight ranges. We had an explosive move in March last year, gave most of it back, came back to a key support in September, October. It's pretty quiet at the moment. If I had to put my fundamental, this is one of the problems of trading for as long as I have. Obviously, in 1980, there wasn't any charts, or I had to draw them by hand. So unfortunately, I know quite a lot about the fundamentals of soybeans, which sometimes can be a bit of a problem. Fundamentally, to me, it's bearish, but I've got to wait for a technical signal. You can see how condensed that time area is at the bottom here. There's not a lot of range there. So a few different things of the yuan is actually quite important, even though it's not necessarily something that's easily tradable.
Good stuff.
Is there an ETF on the yuan?
I did look into it. I think most of the ETFs that are out there are actually presented the other way. So they're one US dollar, and which would imply that you can only you look to sell them. And I mean, I can't personally find other than the futures, I can't find any US dollar yuan to buy. So perhaps you'll be able to buy the US dollar yuan on CFDs.
Right. Okay. Yeah, I suppose just the last thing I'd want to just go through is just UVXY. This was another question we had. Well, one of our subscribers actually pointed this out. So that's one nice thing about having the community. It works both ways. Yeah, it's not just a one-way street. One of our subscribers had looked at this and said, well, look at this. This looks very interesting. This is an ETF on the VIX. The VIX is a measure of insurance or protection on the US stock market. So typically if the stock market started falling or if it suddenly got very volatile, VIX would rise. Yeah. So not surprisingly, since the stock market has been pretty much going up, then the VIX has been collapsing. So it's come down, this ETF has come down a very, very long way. It's from 275 all the way down to 6.5. It's not in a setup yet. You can see everything stepping down below. But put it this way, if I had a big portfolio and was trading a big chunk of private money and I wanted to protect my longs, this would be the way that I can do it, because as soon as, if it does shift, this could move pretty rapidly. And I had a look at the options on this, and like a 6-week call, a $14 6-week call was trading about, what would be 6.5, 7. It was only 25 cents per 100 shares. So for every 100 shares I wanted to protect me, it only cost me $25, which is very, very low. Because obviously the market just keeps on going down and the volatility is very low. You can see that just in the chart. So that is one we're watching. If we do see any signs of negativity in the stock market, which is not really there at the moment, this is something that I will start to look at quite closely, because it could actually be a better play than actually trying to sell the futures or whatever and trade that sort of stuff. This could actually be a better way. So thanks to the subscriber who pointed it out to me. So something that I'm going to be keeping an eye on in the weeks.
A quick question. I think questions just come up from Moina. Thanks for the question, Moina. Any concerns with respect to government intervention
in stocks or bonds or currencies?
Well, I imagine it's in relation to this chart that we're looking at. So,
government intervention. I mean, the only markets that do you want to call up a dollar Swiss chart or a euro Swiss chart, if you know the coders? The only market I ever worry about intervention is normally is foreign exchange related. The Swiss government pegged against the euro. You probably have to do a weekly there, or even, because it was a while ago, wasn't it? There you go. You got those. Yeah, that big spike down. I think it was worse on the euro Swiss. The Swiss government pegged against the euro at 120. Yeah, that great big fall there back in 2015. So effectively, the market thought there was a floor at 120. I think it was. I got the euro against the Swiss franc, and then they suddenly broke the peg. A lot of people got wiped out massively. So I don't trade the Swiss market. Yeah, I don't trade the Swiss franc. It's who knows what they can do. In years gone by, the Japanese government would sometimes intervene in the yen, and so you could get massive moves there as well. That's why if I trade the yen, I only do it via options, so that I don't wake up some morning and been hit massively or taken out or whatever. So those are two markets that I am interested in, but generally intervention on other markets, no, I'm not. There will come a time, probably within the next 2 years, where there is, I suppose you could argue that there could be an intervention in bond markets. I mean, we've already seen that to a certain extent with the ECB, keeping rates artificially low with QE and all that sort of stuff. I think that could actually go the other way. So the market will test central banks' resolve with higher interest rates, and then it'll be a question of whether they intervene and try and create pegs. So that's something that could happen. It's a considerable distance away at the moment. It's not on my horizon, but it's something in the background. So intervention, no. Sorry?
You wouldn't put it past the Chinese government either, would you?
No, they can do whatever they want. Yeah, I mean, intervene. I mean, that's, yeah. Would I trade the $1? No. Would I trade the yuan? No. It's, who knows what the Chinese could do. I mean, when I was doing the private fund till last summer, you know, they continuously wanted to trade Chinese ETFs or a Chinese stock, and I just refused to go anywhere near it. I said, I don't know whether it's for real. Who knows? It's also in the wrong time zone. Why do I want to trade, you know, something I know nothing about that can be manipulated when I'm fast asleep, when it can be that volatile? I mean, the Chinese market went on a huge rally last year and then gave it all back in about 2 weeks, didn't it? So, and nobody could get out because they banned trading on a load of the stocks. So don't need to get involved in those sorts of things. Yes, there could be intervention in the yuan. You know, you could argue that there's intervention in stocks. You know, the Norwegian government buys stocks, the Japanese government buys stocks. Yellen talked about the potential for the Fed to buy stocks at some point in the future. So you could argue that that's intervention. So it's always there, but I'm not really that fussed, apart from a couple of markets that I avoid because it's wise to do so. But I wouldn't trade the $1, for example. Just wouldn't be interested. I'd monitor it. It has some implications elsewhere, but that's all it is.
All right. Well, we're sort of getting towards the end of the hour. So, how would you summarise the week ahead, Sean, for the 4 major markets: equities, bonds, currencies, and metals?
Okay. Well, super tankers. So very important. I suppose my number one focus is on the bond markets. Do they restart their downtrends? Very easy to know where I'm wrong, so that's an easy trade. Very much the same on equities. Are the super tankers going to come in and push it higher? I'm watching for something else to lead the market. I don't think financials can do it, so something else is going to have to take over the mantle there. On currencies, it's pretty choppy. You know, we closed really a little bit in the middle of the range, so I'm a little bit wait and see on currencies. Gold, similar, likewise. Feels like a rally is something that I'm very interested in, waiting for it to fail, or if it makes new lows, starts taking it out, which seems a bit unlikely in the very short term. And watching oil and airlines, so really interested in airlines. That's really super focused on them and starting to watch their price action. So
yeah, so probably the major levels around the grounds, and the Dow, if you see it start taking out new highs next week, 20,000 plus, watch out. That'll probably coincide with bonds breaking down.
yeah,
Equally, the opposite could happen. I think with oil, we need to see it take out 56.15, which is last year's high. That would be the signal for it to move a few dollars higher pretty quickly. And with gold, to my mind, that critical level is 12.20, which is last year's midpoint. So I'll be looking for a failure right there. And on bonds, what's the immediate level to the downside, Sean? I suppose it's around here. It says 150, 151 area. So yeah, look, if we're back under 151 end of next week, then it might be fair to say that bonds are turning down again.
Yeah, I mean, those recent lows in December are significant lows. So we can move down a fair bit to go and have an attack down there, which would still be a profitable trade, and then it would be a question of what it does after that. So they're all in a very similar situation there. Finally, we just had one question from Thomas saying, I'm guessing it's a sizing guide, but when you talked about a max 1% loss, how does that work with overnight stop losses? Well, what we do is we say that on the stocks, it has to close above the level. So it could go above it intraday, but it's whether it closes. And so that means if you were risking exactly 1% based on what the level of protection is going, your loss is going to be worse than that. Yeah. There's no doubt about it. So you could do a little bit lower volumes. So you might say, okay, I'm going to risk 0.8%. I know that if it closes above the level, the risk, the loss is going to go up a bit. In terms of overnight gaps, that's just a fact of life on stocks, and there's 2 or 3 rules that we follow there. First one is, in the US market, I always check when their results are coming out, and if we get a signal and results are coming out within a week, the trade is not done. We don't gamble on results. Yeah. So ODP was a good example. I knew it was in a setup. I knew its results were coming out, and so I wait. And then bad news, good action. Then we get involved. So we never ever trade anything when the results are coming out in the week ahead. The next one is you'll never see me put something out about a biotech stock, getting long biotech, or for that matter, getting short biotech. They are subject to price shocks. You know, a trial doesn't go well. I did a vast amount of analysis on biotech, fundamentally about phase 1 trials, phase 2, phase 3, all this sort of stuff. If you're going to get involved in a biotech, which we will never do, phase 2 is the best phase to be involved in. So they've had some sort of good phase 1. Then you get this speculative move where everyone thinks, yeah, this is going to solve this. So phase 2 is normally when the big rally comes in. The problem you have is that any point in time they could suddenly say, oh dear, the trial has gone badly, and it's always done out of hours. The stock can halve, drop 80%, got all sorts of things. So never involved in biotech. And by the same juncture, you can't be short biotech because they might suddenly come out with some results and say it's all gone brilliantly well and the share price doubles. So not involved in biotech in any way because of that limitation of price shocks. The third thing is, if you've got a position, you need to know when their results are coming out. You might have held it for a month, 6 weeks, 2 months, whatever. And depending on how it's developed, that can be your decision about whether you're going to hold it through their results. If your ODP is up 25%, 30% from where the buy signal was, and their next results are coming out, let's say in a week's time, I make the decision and say, well, fine, I'm going to keep my position through it because I'm making a fair chunk. I'm prepared to give some of that back. Yeah. If, however, it hasn't really moved very much and there isn't a lot of profit sitting there, then why do you want to take that gamble through the results? You don't know, I don't know, nobody knows what the results are going to be, and even more than that, we don't know what the reaction is going to be. So you could get a great set of results, you see the results, think, yeah, it's going to go, and then the stock drops 10%. And you're sitting there going, well, that doesn't make any sense. So they're the 3 rules. Yeah. So yes, because you're waiting on a close, your risk is more than the 1%, so you can change your volume. And just a few takeaways about things that you wouldn't get involved in.
Good stuff. Don't forget, for anyone that is new, the system underneath this is a lot simpler. We've shown you a lot of detail tonight because there's quite a lot of people that watch this every week and are probably becoming accustomed to the level of detail. But don't ever forget that at the end of the day, for new people that are out there, I'm just changing the view now back to a very simplistic view, which is what someone with very little experience would look at and be able to trade off once we taught you how to read a chart like this. So have no fear. It may have looked complicated before, but we can make things extremely simple so that even a 10-year-old, we think, could understand it. And that's what we'll be teaching the people that are on trial this week. And once again, apologies for the delay. It'll come through, I'm sure, in the next couple of days. And we're going to be in touch with you to do our Skype sessions to explain all the software to you. And for anyone that wants to get involved, the best place to go is back to the website. All the details and everything you need to know are there. So feel free to get in touch with us. And are there any more questions at this point?
Just looking there. Just the question on intervention, it was about the worm. So yeah, there could be, but if we're not trading it, it doesn't matter. So I'm not concerned about intervention. But no other questions for now by the look of it.
All right, good stuff. Well, going to be an interesting week. Can't wait to see all the big guys going to be back. So looking forward to seeing what they're doing. I guess on that note, everyone have a great week and look forward to catching up with you through the week for the subscribers and for the people on trial. We'll be in touch shortly. So have a great week, everyone.
Okay.
And
yep. See everyone.
Let's wrap it up there.
Yep. Okay.
Okay. Thanks, guys.